Nigeria's fintech space is a highly competitive landscape where only the strongest and most nimble survive. This was the submission of Bijesse, CEO of fintech player Archer, which uses technology to detect fraud within financial ecosystems. His comments were part of a panel discussion on regulation at the 2025 Africa Financial Summit in Casablanca. Let's have a look.
We use AI to detect fraud for banks and fintechs in Africa. Before that, I started a neobank called PayHippo in Nigeria. We had a central bank license. We gave credit and bank accounts to small businesses throughout Nigeria. My story in Nigeria started in 2018, 7.5 years ago, and it was a story of failed financial inclusion. So I first moved to Nigeria to start a nonprofit to help startups pitch for investment. And after a couple months of doing that, I said, wow, my idea sucks. This idea to help startups pitch for investment is stupid. Okay. Because all of the great entrepreneurs who would go on to change financial services, like Wave is currently doing, or we see MoneyPoint are doing now, they didn't need help from my pitch competition. And on the flip side, the ones who did need resources, honestly, there was no way I could help them reach the scale of a MoneyPoint or Wave. There was nothing I could do to impact that. So the position became, hey, if we want to empower businesses in Nigeria, and then of course in the broader continent, how do we do that? And it became clear that the highest leverage thing to do would be to provide technology for small businesses, not fancy tech companies, but your everyday merchant, whether it's a micro SME or a large, prominent grocery store chain, and then everything in between. So I went to go work for a digital lending company called Lydia Finance. It turned out to, again, be a failed initiative. I worked there for 8 months, and during that time, it became clear that despite lots of venture funding, there was no real technology built. We don't know where the $8 million raised went. And all of the small businesses we promised to give loans in 24 hours. We said, hey, apply to get funding, and we will give you a loan in 24 hours. The reality on the ground was that it would take 3 weeks to even get a loan offer to them, let alone the funding. So this was a failed promise of digital lending. Last week, after all of these years, the company finally announced that it has shut down. After 8 months working there, when I realized, wow, this is the digital lending that is providing financing to the small businesses of Nigeria, and I realized it was a hoax, a failed promise. I started a company called PayHippo. PayHippo started with credit. We said, hey, it's not that hard to build technology. So we did it. I teamed up with 2 Nigerian co-founders. As we mentioned, I was the 3rd Nigerian co-founder. And during that time, we not only delivered on the promise of providing credit within 24 hours, we got ambitious. We said, actually, let's do it in 3 hours. We created a 3-hour business loan where any business in Nigeria can apply, and if they qualify, get funding within 3 hours. The idea took off. It skyrocketed. What happened was people realized it's not that hard to automate lending and then provide credit. So everyone started doing the same in Nigeria. I'll tell you, from the years 2020 to 2023, the amount of digital credit now was skyrocketing. A part of it was us being loud at PayHippo about our results. You should have seen me tweeting. Oh yeah, we got collections rate of 97%. We're growing this much. We were proud. The idea caught on so well that one day on WhatsApp, someone forwarded me a pitch deck for a new company. And the pitch deck in their product, the product was called, for SME lending, it was called a 3-hour business loan. And I was like, look, if you're going to copy us, just change the number. At 3, you could do 4 hours. You could beat us, do 2 hours. You don't need to do 3. So no, I did not invest in that company. But the point is that lending caught on, digital lending. This became a blessing and a curse. Because as folks learned about digital credit, they learned how to game the system. Okay, so they learned, hey, if we just send money between our friends, now it looks like we're doing higher volumes of transactions. Now you're gaming a system. Then you have this surge in fraud. Fraud doesn't just mean identity theft. It also means different ways of gaming a system to get around the rules, or even play the rules to your advantage. So this business that we started that was making so much money for us now became a little toxic. Not toxic that we typically talk about with lending in Africa where, oh, predatory loans. No, this was the opposite. This was the bad guys in a pool of amazing borrowers who were honest people. The bad guys figured out how to game the system. So what did we do? We said, look, we can't do just lending. So we bought a microfinance bank. We offered bank accounts. Say, we are going to diversify our financial services. We are going to get more data on our customers, and we're going to try and outsmart the fraudsters. I'm going to tell you something. Fraudsters are pretty smart. And I'm going to tell you something else. Having a central bank license is not very easy. So that's when our work really started. So after several years, we said, okay, this direction of digital banking is so high risk and increases our workload so much, it's like we are running uphill. But we're not just running uphill, it's raining. And all of the ground we're running on is muddy, and we keep slipping and falling. So we would make it up the hill a little bit, and then you just fall. That's what running a fintech that was credit-led in Nigeria was like over the past 5, 6, 7 years. Then the final thing happened. We saw thunder strike. And that thunder, in the analogy, was MoneyPoint. MoneyPoint's financial services were so strong and robust, we saw no way of beating them while we were getting attacked from every side of fraud, and then, of course, having to manage compliance with the central bank. So what did we do? We went and we bought any service we could to help us fight fraud or do compliance. So we would use software from the latest cutting-edge software from the US, Europe, whatever. We would use it to try and detect fraud. Guess what? It turns out fraud in Africa is different than in the US and Europe. Who knew? Who knew? So it didn't work. Okay, so with PayHippo, what did we do? We said this is not a battle that we win. So we pivoted into a different form of financing climate solutions, solar panels, etc. And we sold the microfinance bank. So I have bought and I have run and I have sold a bank in Nigeria. Okay, selling it is not as easy as it sounds, by the way. So long story short, when we did that pivot, I then said, now that's 3 times I've tried funding businesses in Nigeria, and every time I keep getting outsmarted, or it just doesn't work. So what did I do? I sold my shares in PayHippo, and I started a company called Archer. We detect fraud and help with compliance for fintechs and banks in Africa. PayHippo is now Rivi. I promoted my CFO to run the company. They just raised more money, and they're killing it. They're doing so well. They're making cash. Wow. I am fighting fraud now. And I will tell you that fraud is getting worse than ever, which will create more compliance problems for every bank and fintech within the continent. And so we're going to talk a little bit more about that. More about Archer. We work with Yellow Card. Shout out to Yellow Card. We work with the fintech arm of Access Bank in Nigeria, and we work with a number of fintechs throughout East Africa, West Africa, and then a couple of large telcos will be signing up in the next year, but we can't